The U.S. Producer Price Index barely edging higher in December as a rise in cost of goods was offset by weakness in services. We have the Labor Department data revealing that PPI ticked up by about 0.1% last month, showing a 12-month increase of 1.3%. Joining us now is Eddie Ghabour of a Key Advisors Group. And Eddie, when you take a look at that number that we got out in terms of PPI, what did you think about it?
You know, the amazing thing throughout this expansion, which is pretty bullish from an equity standpoint, is the inflationary pressure that we all expected from tariffs and tight labor market and all the things that have been positive from an economic standpoint as well negative from an economic standpoint that we perceived hasn't shown up. And that's why I think you're going to see the Fed off the table, because they're really keeping a close eye on inflationary rates or whatnot. And I think the market and the economy is kind of like in this Goldilocks range right now, where it's growing not at a very large pace, but not at a pace where we're worried about a recession, and not at a pace where the Fed is going to step in. It's kind of just chugging along right now. And what's keeping us really way ahead of schedule in regards to where we thought we would be is the consumer. Now, if we start to see cracks in the consumer, I'm going to get very concerned. But right now, from a stock market standpoint, heading into 2020, because of those factors, we were pretty bullish. We're due for a short-term pullback, no question.
How big of a pullback do you think we could see? Anything substantial?
I hope so, frankly, because I think we need to get rid of the complacency in the market. You know, when you look at the VIX, and I truly track the VIX very closely, there's really no fear in the market right now. I would be shocked if we don't see some type of, I'd like to see 6 to 8% higher on the 8%. I think that's a very realistic expectation from investors. My biggest concern right now is the amount of complacency and the lack of pullback we've had. That's usually when the retail investors get burned, because they've been sitting on this cash waiting and waiting for an opportunity. They throw in the white flag and say, well, I guess I'm not going to get that. They throw their money in, and then we have a market collapse, or a market correction, I should say. So I believe we're well overdue short term. If you have the right risk tolerance and you haven't participated in this, I would look at that pullback as a buying opportunity that you may not get again the rest of the year.
Eddie, the big story of the day is, of course, President Trump and China's Vice Premier signing the Phase 1 trade deal. When we talk about some of the uncertainty in the market, does that at least take some of the uncertainty out of play?
It does, but I would argue that I think that was already priced into the market. That's part of the reason why we had such a big run up towards the end of the year and even into now. Because now, as we all well know, look, the Phase 1 trade deal I think is fantastic from a standpoint that it shows good faith that there is at least going to be progress on that front. But now the focus is going to be on Phase 2. And I don't think we're going to get any type of Phase 2 deal prior to the election. So absolutely happy that this is done, but I don't think we need to take trade as a risk completely off the table.
All right, Eddie Ghabour, thanks so much for joining me today.
Thank you for having me. Have a great day.